What's up, everybody? Welcome back to Cilinix Crypto. Good morning, and welcome to your daily Bitcoin update, in which I have some bad news. I know that last couple of days I was pretty positive, but some let's call it fundamental developments have come about, mainly economic fundamentals. I mean, as you can see, the dollar strength index has gone up quite severely. Which is, this is negatively correlated to crypto, right? So if this goes up, crypto usually goes down. Now, the fact is that Bitcoin and crypto altogether is actually holding fairly well. We're not making any bullish breakouts, but we are holding our main support level right here between 16,800 and 16,600. So that is good, but altogether, the thing that caused this is bearish for crypto as well. And it's all about monetary policy by the Federal Reserve. There were some reports yesterday and also the day before that the Federal Reserve is going to hold the interest rates relatively high until at least 2024. Now, I'm not sure if that's a good idea, to be honest with you. I don't think so. While the inflation is dropping down to keep the interest rates very high. But that is bullish for the dollar strength index because a high interest rate is good for a currency, but that is bearish for crypto. High interest rates are usually bearish for risk on assets like crypto. So then, obviously, beginning of February, we actually have the monetary policy changes, right? We have the interest rate and stuff, which I used to be relatively bullish about because I felt like the inflation rate, which is coming next week, that's probably going to be it's going to be lower, maybe even lower than expected, and that they would have to change at least their trajectory on the monetary policy side. But it doesn't seem like they're doing that. So that's bearish, and I actually am quite surprised that Bitcoin doesn't react to that more heavily. But to me, that does eliminate the chance of a breakout, not completely, but all right. So it doesn't eliminate, but it significantly reduces the possibility of a bullish breakout. I would say it's only possible if we get some really big institutional buying, for example. So that is, for example, what we've seen with Ethereum. With Ethereum, we saw some really bulk in buys. Like if you zoom out to the last week, especially right here, there were just some big institutional moves. If that happens for Bitcoin, we could still break out. So that's one way in which it could happen. And the other way is that, well, next week, whatever happens, we will still get the inflation rate numbers from the Federal Reserve. See, January the 12th. So if those are lower than expected, we're still going to get that bullish breakout. And until that time, because of the way Bitcoin now is reacting to how the dollar strength index is developing, I mean, we've had some major bullish breakouts, and you could also argue that we are in a kind of starting a reversal with the dollar strength index. And still, Bitcoin is holding its levels, so I do think we can hold these levels. And just to be honest, that's quite a bullish indicator. All right, so I don't want to be fully negative, but where first I thought we could just break out when the dollar strength index would fall, that possibility has been eliminated. So now we really have to, well, I think we'll consolidate, and then until the inflation rate next week, and then if that's lower than expected, we'll go up. If it's higher than expected, then we'll crash. So yeah, that's still, I mean, the more logical approach would be saying that we're going to have a bearish breakout now, but because of the way we're holding now, I think, or because of the way we're holding 16,800, I think we can definitely hold the entire level between 16,800 and 16,600 as a support level, especially in the weekends. And then next week, I mean, before you know it, the inflation rate is coming, right? So that's my take on Bitcoin for today. If you do have any questions, as always, let me know. But for now, take care and bye.